Hey everyone, SoFi Technologies is one of the more interesting financial services companies in the markets, and recently they've made some big steps forward. So I wanted to review what's going on at SoFi, their strategy, shorter term and longer term, and then I was going to update my recommendation for SoFi stock in this video and let you know again whether or not I think the stock is a buy, hold, or a sell. So let's start with the details in what's been happening with SoFi. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. All right, so SoFi's strategy is to make itself a one-stop shop for digital financial services. It wants to be there for you on every major financial decision you'll make in your life, whether it's to buy a car, buy a home, borrow for college, whatever the case might be. SoFi wants to be there to fulfill your financial services needs. It doesn't just want to do one thing, it wants to do everything. So that strategy is ambitious. It's more risky than trying to do just one thing, but it also offers investors a greater upside if it is successful. Now, in addition to that, their strategy is a digital bank. Compared to having brick and mortar locations, they want to offer value through their app and their website. And I think that's a prudent strategy given the rising costs of maintaining physical locations. I think it's more prudent to add value digitally than trying to establish and maintain brick and mortar locations. And on top of that, given how poorly most brick and mortar banks have operated in recent years, I think it's a good time to competitively step in and capitalize on that trend. Of course, you've noticed the big banks like Bank of America, Wells Fargo, and Chase, they've all been pulling back their services, cutting costs, and making their brick and mortar locations less valuable to folks. And so that's created an opening for a company like SoFi, and SoFi is definitely capitalizing on that trend. All right, so heading into this year, shorter term now, let's talk shorter term strategy. SoFi was taking a conservative outlook. And almost every financial institution, every large corporation, every investor, including myself, was cautious coming into 2024. It's because the Federal Reserve had increased interest rates by 500 basis points, and we were expecting a slowdown in the economy in 2024. That has not materialized. In fact, I've been surprised at how well the economy has performed so far in 2024. Regardless, management maintaining a conservative outlook, and their plan is for lending to be 92 to 95% of 2023. In other words, they expect revenue from lending to decline by 5 to 8%, a decline when the overall revenue for the business is going to grow. That's because they want to make fewer loans. They want to be more selective to balance the decreasing strength of the macroeconomy. So management still being cautious for 2024. And I think that's prudent. I think that's wise because the overall strategy of SoFi's business is already at an elevated risk. So within its segments, it makes sense to de-risk the riskiest part of its overall strategy, and that's in lending. And if you want to zoom in even more, they should decrease the personal loan portfolio within its lending segment. So really focus on de-risking wherever it can to make sure that it can grow sustainably for the long term. Right. So coming into the year, given that conservative outlook, they wanted to strengthen the balance sheet, right? You want to get your liabilities lower, your cash higher to make sure you can withstand difficult macroeconomic conditions. And they've done that so far in the first quarter. They also increased revenue by 26% up to $581 million. And that's the 12th consecutive quarter of over 25% growth. Now, one of the reasons investors are most excited about SoFi stock is because of the technology segment, financial services and technology, not just the bank. It doesn't want to be known as just a bank. In fact, it wants a 50-50 revenue mix between financial services, technology, and the bank. Because banks don't have very high valuations. Banks trade at forward price to earnings ratios of 15 or below. But if you can sell yourself as a financial services or a technology platform, those get more premium valuations. Those can sell for more premium prices. And that's where you can generate stronger profit margins with lower risk compared to lending, especially personal loan lending, which SoFi does a little bit too much of for my taste. So these segments are now contributing 42% of revenue. That's up from 40% last year, and they're on schedule to hit 50-50 mix by the end of the year. Another great thing about SoFi is they're now profitable on the bottom line. GAAP net income of $88 million in the most recent quarter. That did include a one-time benefit of $59 million. That's not going to happen again, or unlikely to happen again. It's not a regular thing. And while after achieving GAAP profitability in the fourth quarter of 2023, they're committed to sustaining that profitability for the full year in 2024. So their profitability on the bottom line is not just a one-time thing, is what management is saying here. They're going to continue generating profits going forward. Maybe not every single quarter forever, but they're focused on becoming profitable on the bottom line going forward. Now, SoFi stock is trading at a forward price to earnings of 36.8, roughly the cheapest it's been, according to this metric, going back all the way to early 2023. So the valuation of the company has decreased primarily because of the higher risk profile of the business, and this business is not one you would want to be invested in if the economy was heading into a slowdown. Banks are some of the most exposed during an economic slowdown. And why is that the case? Well, if you lose your job, one of the first things you're going to do is miss on your payments, especially personal loans, which SoFi is significantly exposed to. They decreased a little bit in the most recent quarter, but if there's a slowdown and people lose their job, people are going to stop paying those personal loans at a higher percentage than they're currently doing, and that's going to be bad news for SoFi and SoFi stock investors. So understandably, investors are hesitant going into SoFi stock. It's already trading at a premium valuation. It's trading at a forward price to earnings of 36.8. And I highlighted that banks are trading at a much lower valuation than this, right? You look at Bank of America, JP Morgan, Wells Fargo, they're trading at typically lower valuations. And even if you compare SoFi with an excellent financial services company like Visa, it's trading at a more expensive valuation than even Visa, which is the most profitable company in the world, arguably at least the most profitable company that I follow. So it's already trading at a higher valuation, pricing in those excellent prospects. Still, despite that premium valuation, despite the fact that it's already trading at expensive valuations, I recently upgraded, I think I upgraded SoFi stock to a buy. I can't recall off the top of my mind when I upgraded SoFi stock to a buy, but I did reiterate this recommendation on April 29th. I do keep track of when I update the recommendation. I don't keep track of my initial upgrade or my initial downgrade of the stock, but I do keep track, as you could see here, of when I last updated the stock. And on April 29th, I last updated and said, I think the stock is still a buy. And today I'll update it again and reiterate this recommendation that I still think SoFi stock is a buy. It's not my favorite stock to buy. There are others I like more, primarily because of its valuation and the greater riskiness of the business. But still, I think overall the risk versus reward is worthwhile for SoFi stock. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.